Our next guest is an Airbnb investor who believes the next wave of consumer IPOs will reflect an innovation revolution. Venture capitalist Rick Heitzmann is CEO of First Mark Horizon Acquisition. Rick, great to see you. Welcome back to the show.
Great to see you again. Thank you. Thank you.
You know, Deirdre had mentioned, the bad taste maybe left in some investors' mouths who invested in Lyft and in Uber. But on the other side of it, we see a reach for high growth companies. What do you think will prevail in this sort of pandemic trading environment?
I think you've seen a lot of companies go public and perform very well if you look at Snowflake on the enterprise side. But I think the problems that Uber and Lyft have faced are dealing specifically to that transportation sector, specifically related to, I mean, I don't know what your personal habits are, but the amount of people taking Uber and Lyft have dramatically decreased since the pandemic. If you look at other names that are focused on the consumer, DraftKings has performed excellently since its public debut earlier this year via Spax listing. And also, you've seen Pinterest double in price. You've seen Snapchat and Twitter increase in price over time. And I think it's probably less specific to the growth that you were seeing in that sector and more specific to folks chasing growth, chasing a high return on investment and some of these consumer names.
For an Airbnb, during the pandemic, I didn't think that anybody would want to go to an Airbnb in that sort of environment. And yet here we are. Business, as Deirdre had mentioned, is in fact booming. Is there a rush, in your view, to get that out the door now that things are hot? And what happens when things go back to normal and people actually start flying and staying at hotels again?
I think that we were already seeing before the pandemic, tremendous uptake from Airbnb. And they were both taking shares from traditional hotels as well as vacation homes. And then in the pandemic, they've done a great job on a couple of different things. You've seen more folks go and do kind of work from home somewhere else. So if you're living in a place like New York, living in a place like San Francisco, do you really want to work out of a small apartment, or would you rather go to Lake Tahoe or the Catskills? You've also seen the desire to go to another place, and whether it be a driving vacation. The Airbnb kind of pivoted from what was historically called the top 3, top 5 cities, the Londons, the Parises, and New Yorks, to doing more of, hey, here's a 2-hour driving vacation, which you might do as a different alternative this summer or fall, and experiences. So I think that they've pivoted in response to COVID. I think if travel were to come back and hospitality were to rebound, they'd also be able to take advantage of that trend.
Hey, Rick, it's Dan. One of the biggest stories in the stock market this year is Spax. You and your partner, Anish, through First Mark, you just launched a SPAC, $360 million. Why did you do it? Why now? And is this a unique transaction for a VC fund like yours?
Thanks, Dan. Yeah, I think we learned a lot about the SPAC process and learned a lot what was going on in the markets through our investment in DraftKings. And that's been a tremendously successful SPAC. And DraftKings has been kind of a unique, very high quality company. And as we thought through that, we partner with entrepreneurs at the earliest stages and at the growth stages. And if we're able to partner with entrepreneurs from the earliest stages and be their lead director, be their advisor, and be the first company to be able to partner with an entrepreneur through first institutional investment through the public markets, we'd be the first company of our sort to do that. So being able to have that unique offering to entrepreneurs as well as investors, I think in what you've seen as maybe a rush for folks to get into SPACs makes us completely unique.
Hey, Rick, it's Tim. Thanks for joining us. DraftKings, you've been in the middle of this story. What do you see in the way of strategics coming into this sector? Because we believe this is where big media has to be, and also major sports have to be.
I think major sports and media has to be there. I originally came across DraftKings because I was serving on the advisory board of a couple of professional sports leagues, and they thought they had to be there. It's another revenue channel. How do you build ancillaries when you can't charge anymore for tickets or media rights? So I think they have to be there. As commonly reported, Disney is a very large investor in DraftKings and a deep partnership through ESPN, which is probably the premier sports media property. So I think everybody's kind of rooting and picking their partners. I think DraftKings has some of the premier partners in the market due to some of those relationships, as well as relationships with folks like the Philadelphia Eagles and the New York Knicks. So I think this is going to be a huge fundamental growth area. We're just seeing the beginning of it with certain states allowing legalized gambling. And you're going to see this play out over the next 5 years or so, probably even quicker than we would have anticipated, because states are going to need the tax revenue dollars. So beginning of a trend, but we think this is going to be a huge macro tailwind over the next decade or so.
Just quickly, Rick, Disney is reorging, and so if they were to spin out, let's say, their ESPN business, could you see DraftKings and ESPN have a more permanent, more formalized partnership or marriage, perhaps?
I don't know about a marriage. They have a pretty deep partnership now. They're dating pretty heavily. Disney owns a fair amount of DraftKings stock, and I think that DraftKings is integrating with them. So they might be going steady. I'm not sure if there's a marriage in their future.
Shepard Smith here. Thanks for watching CNBC on YouTube.